2010 and then 11, maybe we just started the business and we need to cover all the expenses and rentals and gyms and employees and stuff like that. But then after 5 years, you start to cash flow, and then all of a sudden, same problem. You got more cash when you just set your life for, right? So then that access of cash start to think, and then I start to sell my apartments, right? I sold my first apartment, and let's say I think first one was $271,000 when I transferred here, and I was like, oh, but I don't need that money. I do work every day.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder and CEO of Zana Investments, Tim Little. And on today's show, we have with us Igor Shaltanov. Igor is founder and managing partner of Avista Fund and a former professional athlete who transitioned into successful entrepreneurship in real estate investing. Igor, welcome to the show.
Thank you, Tim. Thank you for having me, and then always pleasure to share some experience.
Yeah, and obviously I want to get into Avista Fund and real estate investing because that's what our show's all about. But you do have some other interesting things in your background. So why don't you tell everyone how you got to where you are today and how you got started?
Oh, yeah. So that's a great story. So I was born in Russia, Moscow, and then I would say just below average family, right? We never had financial, I would say, security or like access of financial. And then it get me started with the sports, right? And I saw myself doing the sports, and that's going to be the way out, right? For me to travel the world and get the experiences I never otherwise going to be able to get. And then maybe at the age of 15 or 17, I'm outside, right? And then I'm talking to my friend and he's, oh, you know what? I'm going to pick up the money from the guys. I was like, what do you mean money from the guys? He says, yeah. So we're renting the place and then people pay and then we're giving the money. And at the age of 15 in Moscow, no sense. What does that mean? So what is that all about, right? And then you just pick up the money. So it just sounds like weird stuff. Anyways, that's the first time ever I heard about people living in the places and then they getting the money, right? If you just give them a place to live. And that time, right, I was like, wow, it's something weird. I didn't pay attention as much. And then as I became more professional, right, and then I became more professional athlete, right, start to make money. And I start to make more money than my mom, let's say, at the job, and then more money than I need to spend. So it gets me going saying, okay, what are the people actually doing with money? So what's the best way to, I wouldn't say to invest because for me, it was like, what's the best way to actually manage that thing? So what is that thing about? Mm-hmm. So time back then, so we had an apartment and I was like, not the story. So no, my mom just got an apartment, for example, spare apartment, right? Which is not for just the single purpose of living there, but then for the purpose of what we're going to do with that. And she said, oh, you know what? That's going to be sitting there on the sidelines, right? And then we might use it, might not sometimes. And that, when in my mind, that first conversation just popped up, I was like, man, I heard about, listen, you can rent it to the people and people can leave and pay money for that. And then I talked to my mom. I said, listen, we get this new apartment. I'm going to remodel that. I move you over with my dad. So you're going to be both living in a brand new space, right? Which is absolutely fabulous, right? And you guys deserve it. They live there for 25 years, I think, in the same place. And it's outdated, right? And then I said, I'm going to remodel that. I move you guys over, remodel that whole unit, right? And then I'll rent to the people. And this is exactly what I needed. It took me about 6 months to convince them, right? Because they were completely unknown, I would say. They were like, what is that about? We don't want to move to a new place. We got used to our new place. We like the forest, the parks, the nature and all of that stuff. And I was like, no, listen, so you guys deserve the brand new. It's all beautiful. You guys try it. Anyways, after 6 months, they moved over to a new place. It's already remodeled, beautiful. And then, so I just put some, I would say back then it's like a lipstick on that old place, right? I just put the brand new wallpapers and this and that, the kitchen a little bit, right? Upgraded. And then the bathrooms, we checked the plumbing, renting this to the two students, I would say, right? The young guys, two young guys, young professionals, they worked at the firm. I think they were lawyers or something like that. And then they were basically splitting the payment in half, which is a lot easier, right, to pay. And I didn't understand, back then I didn't understand the best way to do that, right? Because now you split the income between two different companies, two different employees and then employers. So basically that first experience gets me going. And then aha moment when you receive the cash at the end of the month, because again, remember Russia, it's in 2000s, right? It's all paid in cash. It's not about leverage. It's not about the banking, right? It's all cash, right? It's all paid off. There's no payments, no taxes. I mean, if there is, 0.51% or so. And then it's not taxed back then. So basically you receive the cash, which is my mom received the cash, I would say, right? Which is equal her monthly earnings. So that aha moment was like, oh, he can rent the place, and you basically, as much as you work at work, you get the same amount of money as you don't work and you rent it to somebody. And it was just absolutely amazing experience. And then we've done it for maybe about, I would say probably 5 years or so, right? And the people were paying. So we're getting that cash. The cash was going to the bank account, right? The bank account accumulating cash. And then at the 5-year mark, we sold that, right? We sold it at a big profit, right? So we took that money and we bought another 2 apartments, right? And now we were more strategic. Okay, where's the best place where the people wants to live? Now we start to become more sophisticated, right? Saying, okay, what's gonna, and back there it was the play off. It's a brand new construction. You pay less money, a lot less money, because you're taking that risk. So by the time it's built up, so it's about maybe 20% more, right? It's priced more. And then by the year 5, it's even priced even better, right? Even more priced because of that whole infrastructure around the apartment building. It's just completed and finished. And then, so one of my experience gets me going, right? I bought one apartment with 2 parking spaces, right? The apartment needs attention and the remodeling, let's say the parking space not. So, and then we calculated there's maybe about 500 people, let's say, don't quote me on numbers, 500 people living in apartments, right? There's only, let's say, 100 places where you can park your car. And then there's a garage, like a big open space garage right next to it, right? And it's sold for maybe, let's say, $10,000, right? After 3 years, when everybody moves into that building, that one parking space, like triple the price. And the reason, because of supply demand of this. So those are little experiences. This is the beginning of my real estate career. I start to really understand supply and demand. What do the people want? So why would they pay money? So what they absolutely don't want in their place, right? What's the obstacles, right? If you want to rent the place, if you want to be continuously renting, right? Year after year, tenant after tenant, right? So this is my humble beginning of the real estate investment.
Yeah, that's great. And I want to dig into a couple of things because I know people are going to be listening to the show. And the first question they're going to ask is, okay, so you play professional sports. So what did you play? Like, people are going to want to know what you did. So tell us that before we get into some of the other stuff.
Oh yeah. So I played water polo. It was professional water polo. And then bringing up in the United States, it's not super popular sport, but the funny story I'm always telling all people, there's only 2 people from the United States played in Russia, right? It was one of them, that's Adam Wright, which is the UCLA coach right now. He's a 4-time NCAA champion for UCLA. And the other guy is Ryan Bailey, which is commercial broker in Long Beach, where I'm at, right? I'm close by both UCLA and Long Beach. And I'm still in touch with them. So I'm still connected to them. They helped me a lot during the U.S. accommodation time.
Yeah. So for anyone who is not aware of what water polo even is, it can be like brutal and very taxing, because if people want to think about it, just think about treading water for a really long time while trying to play basically handball or soccer with your hands while treading water with everyone throwing elbows as you do it. So it can get pretty violent, even if unintentionally.
Yeah. Sometimes it's tough. Yeah.
Yeah. So that's awesome. And then the other thing that I think I want to point out is here in America, obviously, everything is about capitalism, right? About money, making money. And I think people need to get into their mind like, oh, who wouldn't know that people rent and people make money from that? Like, but the truth is, a lot of people that even live in the US don't think about it. It's just the way it is, and even I, used to be a renter and would pay my rent every month, but wouldn't actually think about the person that's on the other side of that and doing it as a business. So for you, seeing this in post-Soviet Russia, they haven't had nearly as long with this capitalistic experiment, if you will, as we have in America. So for you and many others, it probably was a relatively new thing to see these different ways of making money. Is that a pretty accurate assessment?
No, it's a really good assessment. The other thing, just remember, and I don't think we take it for granted for sure. If you look at the YouTube development, when was the first video of the YouTube? It was like 2010, 10, 9, maybe when it's became
Hmm.
thing, you became, oh, you can YouTube something on it. If you want to hit the hammer, right, go on YouTube and put it in, right? And it's going to be right there. Same with real estate. So back then, because of, I don't remember like a Russian book about real estate, like the Russian actor who's showing you how to become like a wealthy person through the real estate. You know what I mean? So that was just intentional. It was just, listen, we got to go through that point of, okay, number one, how to find information, what type of information you want to find, so what to do. And then again, some of it was just a try it, right? Try it and fail, trial and error, and then so you fail a couple of times and you'll find out, right? But then, so the intention of me being a passive investor, that was just very subconscious, internal, saying, listen, so I want to be investors. Like I want to invest my money. I don't want to be like really, I don't want to be the best employee. And again, so the sports and going through sports, it gives you that understanding so your body can take only so much. So your body can handle only so much, right? If tomorrow you break your legs and then it's going to be something consequential, it's not just a simple fracture and stuff like that. If it's like you're done, so you're not going to get any income anymore. And I think it gives you sense, immediate sense of what you need to do in the future for you to be able to earn or receive that income still without putting your body to work.
Yeah, and I think that's an important lesson for any professional athlete or any high income earner, for that matter, right? Because even with a high paying office job, if people aren't actively investing that money when they're getting it early in their careers, then anyone can get fired, anyone can get low. And sure, they may be able to find another job fairly quickly, but there may be a period in there where they have to use some of those reserves to pay their bills and stuff like that. So I think it was really smart of you to say, hey, I'm making this money now. I have this opportunity. Let me find out how to invest it, because you obviously didn't know then. And which goes to the other point that you made, which information hasn't always been at our fingertips, right? So for the younger viewers and listeners, we didn't always have a cell phone in our pocket that we could immediately Google the answer to any question and watch a video on exactly how to do it. There was more research involved, or more like what you talked about, which was learning by doing, which is, I think, what you did in large part. And yeah, you may have gotten some things wrong and you got some things right, but with each time, you got more strategic, like you said, in how you were evaluating and buying properties in order to make more money on the next one. So it sounds like we're still in Russia at this point. At what point did you transition from Russia to the United States, and how did your business evolve during that transition?
That's a great question. And I think, again, my first intention was to save money, right?
Mm-hmm.
Even so, I was invested, but it was unintentional. So it was just a save. Number one was in my mind, I can save. And again, what I'm saying, save for myself. So I won't buy you, sell, blah, 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 like you name it, right? And then save from whatever happens, because you never know. And I've been through multiple cycles of when you have that asset and then God forbid you need the money. So you just put it on the market and it's gone, right? And you got all the capital you need it, right? And it could be, again, for the opportunity, or it could be for just to survive, right? You never know what happens. And the transition happened again. I had a law degree. My second degree was law. And then I
Okay.
was working as an assistant judge in Russia, right? And then working through that system, and then I'm talking about the legislation, right? And then the court system and all that stuff together. I was looking at my peers, like 20 years ahead of me, and whoever, like almost retired person, and they do have a really good benefits. They do, right? But then I was looking at their lifestyle. I was like, man, I don't want to live like that. Number one, they've been at work from, let's say, 7 in the morning until 9 p.m., right? And they in the late 50s, and they still 7 to 9. I was like, what is that for? I don't want to live like that. Number one. Number two, they've been on the radar all the time. Why? Because they all drive the worst cars possible, right? They would put the worst clothes possible. And for the reason is, so because nobody's gonna say, "Oh, you guys taking money for making decision, right?" And stuff. Or maybe you just
Mm.
doing something under the table, and they've been always like downgrading their lifestyle. I was like, I don't want to live like that either. So this is not my intention, right? You can give me all the money in the world, but I want to use that opportunity, right? This is why you have money, because I want to use that opportunity to travel, to drive whatever kind of car you want, right? To buy, if you want to buy something, right? And again, so I said, it's not going to work. And then my wife, she's a professional basketball player. I was a professional water polo player. We met in Turkey. And then when we met her, she said, you know what? My brother is just got drafted by Clippers, right? They left to Los Angeles. And then, so they're going to be living out there. And then it was probably 4 years after I was like quitting my job from the court, right? And she says, you know what? We just built a house in Russia, right? That we all set for life. We got cars, the house, it's paid, apartments. You don't need basically to work as hard, right? If you want to cover your bases, right? And then she was like, you know what? Let's go visit my parents. I was like, and I would say it's November 2009, November 2009. And it's in Russia, it's like snowy, like it's super cool, snowy. And then we just finished the build up. We tired, we feel accomplished, and we say, yeah, let's go. And we grabbed my son, and then my wife basically taking me to her parents in Los Angeles. And we laid in Manhattan Beach. I don't know if you've ever been there, but then we laid in Manhattan Beach in November. Beautiful weather compared to, right? And then people laid back, everybody in flip flops, shirts and t-shirt. And I was like, nobody told me people can live like that. I was like absolutely shocked. Everybody's smiling. Everybody like so polite. You guys come here, please sit down. How you guys doing? So strangers are smiling and asking you, how do you feel? So, and I was absolutely in love in the second one. And then especially my love for the beach and looking at the ocean always, right? And then I'm walking by the pier. I was like, oh my goodness, how is that possible? And then we sitting at the meeting at the dinner table, and we had a manager who was helping the family, and she's saying, why are you guys coming back? And then she just asked one question, because we had a ticket there, that we had a ticket to Los Angeles and back. So we didn't buy
Mm-hmm.
a ticket. So we said, we're going to be back. I was planning to open a new business, and we had a bunch of different plans in our mind. And when she asked that question, it just struck us immediately. We're like, oh, boom. I was like, why do I come back? Because I never asked myself, why do I come back? And the only reason why was my parents. I was like, oh, there's no reason. I don't have a job. I don't have, I don't know, like future, I would say. I really understand the system. I don't want my kids experience that system as well. So basically, when we sit down, we talk to mom, said, listen, so we got to make a decision. And I called my mom after maybe 1 day or 2 days. And I said, Mom, you know what? I'm not coming back. So I'm going to stay in the United States. She was crushed. She was like, oh, I'm never going to see my grandkids, blah, blah, blah. But she respected my decision. And that's how the transition happened. And we didn't actually invest in real estate because the cost of living in Russia and Moscow for us, because the basis was covered. And then here was just a huge jump, right? It's just a night and day, because there it's all paid. Here you need to rent, and then you got to put yourself in a position when you have a business or an employment or whatever. So basically, we opened the business maybe 2 months after. So in March 2010, we already opened business. So we filed all the paperwork in the state of California, and the business was related to kids because I was professional athlete. My first education was PE teacher and coach, and we started to coach kids. So basically, we opened the basketball academy for kids, and then because of the brother background of the MBE, so we used that as marketing material. So because of my wife, professional basketball player, her father was professional basketball player, I was professional water polo. So we got all the sports around to market, and then so. Number one, we had a passion. So I had a passion. I can speak for myself. I had a big passion to basically share my experience playing, share my experience of how to become professional at the highest level possible, because I was playing for a Russian national team, the club team, and all of that in between. So basically, we started to get one client, 10, 200, 200, 300, one location, two locations. So the business started to really explode. And that was the second capital event, which just gets me going again. So in the beginning, it was like, okay, survival mode. So we're in a new country, so we got to save every dollar. And we were saving like, I'm telling you, by dollar. In 2010 and then 11, maybe we just started the business and we need to cover all the expenses and rentals and gyms and employees and stuff like that. And, but then after 5 years, it start to cash flow. And then all of a sudden, same problem. You got more cash when you just set your life for, right? So then that access of cash start to think. And then I start to sell my apartments, right? I sold my first apartment. And let's say, I think first one was $271,000 when I transferred here. And I was like, oh, but I don't need that money. I do work every day. So I have my business, which is cash flow with, and I got, let's say 300 grand. I just combined with my savings. And then my first experience was, oh, not even real estate. I was working out at the gym, and then I had the friend, his name is David. He's a teacher, like a normal school teacher from New York. And I was like, David, you look amazing. He may be about 70 years old or so. You look amazing at 70. You're working out every day, because I was working out at the gym. He was working out at the gym. We go to sauna, and then we talk to each other about money and the financial literacy and stuff like that. And he was like, listen to me. I was like, David, I got a bunch of money. I don't know what to do with that. Maybe I'll buy real estate. Maybe I'll do this. And he was like, oh, you know what? There's a stock market, right? And then there's all of that. You can buy Apple stock, Facebook stock. And I think he was buying Facebook back then, which is a great decision. And then he was like, you know what? I got the guy. All of them are bad, but I got one guy. I would probably refer you to him, and then he will take your money and he'll be manage that money for you. And 2 years into investments, he gave me his name is Kyle, Ameritrade, I think, Ameriprice, I think that's the company. I gave it to him, and then he was like, he started to manage that capital for me. And then I was like, 1 year, I look at the statements. Okay, the market goes up 2%, so the fee charge 1.5. Your earnings 0.5 per year for 12 months. I was like, man, I can work at McDonald's and make a lot more money than just putting this on the stock market with that amount. I was like, what is that for? It doesn't work. Something is broken. So it's going to take me 25 lives to get right financially independent. And then that was my first experience. The second experience was when the second year passed, and then it was just a Russian currency drop, right? Like I think $1 became, it used to be 30 rubles and became 60 rubles basically. But the adjustment in the real estate prices happened. It's way slower than the just adjustment in currency. And then I was like, I called my broker, like Kyle, said, listen, I found the real estate deal. Can you release like a couple $100,000? I'll buy it and then I'll be renting to the people. I feel like it's a lot better model than just being in the stock market. And I piece out some money from the brokerage account, and then I bought multiple apartments, and then I start to rent them. And I start to rent them, start to manage them again. And I bought the single family house. It was an outdated kitchen, was absolutely like the optic trash backyard, right? So what I did, I just basically remodeled the kitchen. I just painted the whole thing. It was a good bonus, right? But then I did the whole outside of work, the front yard, right? Basically, I just keep beautiful stucco, right? And then change a little bit of flooring as well. It's a good piece of the real estate, right? On the so street. It was just Reseda, California is like mid to low, probably like B minus class, right? Neighborhood. And I rented to the people. And that was my first experience of renting in the United States. Was the single family houses, right? And then I started to really understand how much it takes to remodel this, remodel that. With apartments, a little bit smaller scope of work. With a single family, it's a lot larger, right? Just because of this area, right? Outside of the house. And then you got a roof and all that stuff. And then it was successful for me. Why? Because I was at the top of the wave of the market, right? I just bought it low, right? And then whatever I did, the price of that house was going up no matter what. And I understood that later. But then my experience of leveraging, because I put 20% down, I think, and then I was paying mortgage every month. And remodeling took about 6 months. When I rented, it took maybe about a year before the first tenant moved out. When they moved out, I started to pay mortgage myself. And then month one passed, month two passed, I'm paying off my mortgage. I sit down, calculate the profit from the house, just the pure profit without speculation on price. I was like, okay, it's zero, maybe minus something. Why? Because you pay that mortgage every single month, right? And if you didn't find a tenant fast enough, you're going to be going underwater. And then anyways, I was like, that's fine. I do have cash. I covered those payments. I start to understand it's not a business model, right? It's more like a appreciation play, right? Especially in California. And then when the second tenant moved out, I really understood, okay, now I'm again paying that mortgage. combine my income for the last 4 years, for example, right? And then you just look at your payments coverages for debt rate service, and then just nothing is working. I was like, man, single family is absolutely maybe if you multiple of them, but again, now you don't want to extrapolate the maintenance headaches or the maintenance requirements to carry that portfolio. I was like, no, this is not the place I want to go into. I got successful. I got lucky. I sold that thing at profit. And my dream was to buy real estate. It was larger, like the multifamily units. And I started to become more sophisticated. I started to listen to biggerpockets.com. I think it was 2017, 16, maybe or so. And then they start to talk about, oh, you got one roof, you got 100 units, and you got all the people, right? And they all work in different places, right? They all pay and cover their apartments, and it's a lot more affordable for them. So it's a working model. You got enough enough meat on the bone, so you can hire property management. It's going to be on site. It's going to be a professional company, or you can just third company and that thing. Anyways, so I started to really educate myself, and then I was walking on the street. I was like, I want to buy apartment complex. I want to buy apartment complex, like manifesting myself, right? And then in 2018, I think, and 19, I met my partner Nikita. So we get together. We say, listen, and he shared his story of buying 4 units and like 2 buildings. I don't remember units, 2 buildings in Florida, right? Multiple units. He said, I had a great experience, but it was like probably 4 units and 2 units, duplex and fourplex. And then he said, but it's a lot of management piece. I got lucky. So it went up the price. I didn't fix some of the things I thought I'm going to be fixing. So basically I sold at profit. And I sold some of my things as well as profit, and combined first, let's buy an apartment complex. And we look at California. Again, we didn't know the law for California. So it's a more the tenant friendly than the Lord friendly place to be. And we're dreaming about buying in California, let's say 50 units, maybe the minimum we want to go down to the unit count. But then any price you touch, it's like $15 million, $20 million. You get, I don't know. I was looking at 20 units yesterday. It was like $7.7 million. So the price is insane. Freaking, the price is so high. And then compared to the unit price, the rental is so low. You're like, oh, how much you make? 1% or 2% a year? Like it's ridiculous because the prices are so high. And then it will start to go into I think I talked to my mentor, and then he talked to a couple of his friends, and they were, oh, there's syndications. And we were like, wow, what is that? What was the same aha moment as I had back in Moscow and Russia? What is this rental? What is this syndication about? Like, you guys tell me faster. And then by that time, it's again 2020, I think it's a lot of different outlets, a lot of different seminars, right? The groups and stuff. And we start to digest whatever we can, get our eyes and hands on, right? And the mind on. So I started to listen to different podcasts, right? And we start to be like a part of different communities, like a Brad Soundrock, there's a Raise Masters, there's this group, that group. So we start to really dig into different operators. We start to really learn what's the syndication about. So that was just my transition from real estate to syndication. So I'm going to stop here.
Yeah, no, and there's so much in there that I can dig into. I think the first point is that, like a lot of people, you wanted your money to work for you. So you went to a financial advisor who was managing your money. And like most people, you went in there with the assumption that you were going to make money. Like that's their job. And the amount of money, the performance was not what you were expecting, right? After fees, after marginal performance of the stocks themselves. And I think the important thing to understand is that a lot of people just never stop there. They just keep their money locked up with these money managers who are getting them returns that are barely above inflation, and then with these large fees, but they think they're doing something, right? And they're taking action, and they just assume it's the right thing to do because they don't know anything else. So I'm glad you were able to, one, escape out of that, but then two, transition to real estate. And not to say that there's not a place for both, for active money management, but one, they have to be good at it. People need to understand up front before they start the fees associated, because those can just eat away at profits if those fees start to pile up. So I'm glad you were able to transition there. And then the other piece was like so many people, starting off with single family house, but realizing the limitations there, and also understanding that you're able to scale by going to those larger properties, even whether it's a duplex or a quadplex. At least you're getting the benefit of mitigating some of that risk when someone moves out. Like you said, you were paying 100% of that mortgage when you did not have a renter in there. If you even have a duplex and you have a renter on one side but not on the other, at least someone is helping you pay that mortgage if you have that one unit rented. So that's one thing I always try to impress upon people is if you're investing in real estate, that's great. But I still would argue that single family is the riskiest for that reason alone. And it sounds like you came to the same conclusion. And then a lot of people went to syndication. Let's move quickly into what you're into now with the fund that you have going.
Yeah, that's a great transition. So I think, so I'll go back a little bit still to the syndication starter time, because we still had a problem, and that's where the fund came from. Was we still had a problem, like how would you find the operator? How would you find the deal? How would you find the good operator? How would you just vet the operator? And then how do you know if they legit? How do you know? Because honestly, it's like a wild west a little bit, right, on the sands, especially if you look at 2020, 21, 2020, 2022.
Mm-hmm.
Why? Because it's like I said, it's been like going into the wave. It's going uptrend. Whoever is doing whatever, so they all gonna win. And now when we got no water right in the ocean, it's tied up, right? So now we got all the people who actually know what they're doing. And we've been through like tens of projects. And now we understand who's actually a real operator and who's not. And then now we understand who had an experience in 2009, 10, 11, right? And what they were looking for, right? In 2020, 2021, 2022. But again, it's been like a really good experience. Why? Because so we start to build the base of the operators. So we came to the point when we still have it. It's about maybe 380 different operators and then one list, and we'll put the scoring system against them. Because it took me about a couple of years to just go dig down, connect to them, talk to them, sometimes fly to them, look at the project, look at the team, like talk to them, and then, go to the restaurant, just do basic human interaction, right? To understand what type of people are there when they pay, just simple things to pay the check after the dinner, right? Or maybe lunch and stuff like that. And the first challenge was, okay, listen, so we need to find the good operators. And then I was thinking always on the people who, let's say, 6 months or to 12 months behind me. I was like, how would they find the operators? How would they vet those people, especially if they just start? When we start to invest our own money first, so we start to look through the lens of, okay, is it going to be a good operator for a future partnership? Or it's going to be probably like just for us and to risk our own capital, right? And then, so putting that every single deal through that lens, is it going to be good to refer that person to all the investors we have in the future? So, because we were building that intentional in that portfolio to really vet every single operator and then the asset class as well. Because in our portfolio, we had like ground up development. Now I'm talking about asset class. Now we've got ground up development. It's basically different applications of syndication. What does that look like right now? It could be ground up development, right? And again, so in our experience, none of this worked really well. So maybe they will be, I don't know when they're going to be built out, but now it's just all, so to speak, disaster, right? I'll use that word. And then there's another experience when they got deep renovation, right? And that's never happened. The capital was diluted, right? And another big trouble. So we had another operators when we had like a floating rate. So we tried that one as well. So that's in big trouble right now because the interest rate just skyrocketed and stuff like that. But then the ones who were like very conservative, who just fixed their debt, right, for long term, and the ones who didn't have Napoleon super intense, right, the business plan to convert all the building from upside down, right, and stuff like that. They're all winners right now because they were conservative. They knew exactly what they're doing. They stick to their plan. They were not chasing the shiny objects, right? Not looking at different sides, right to left, right? We're going to buy this and that. They were like basically sticking to their policy, right? Following the investment procedures and then doing the business. And then we vet those guys, what I'm talking about from the fund level. So we vet those guys. We really understood. We built a connection with them. We fly to every single state where they at. Because once we start to invest and we start to understand, oh, there's, let's say, for example, taxes, right? Everybody's talking about the taxes. So when everybody's talking about Tesla stock, it's might be the good time to be cautious, right? Not to time to deploy the capital. And that was my feeling because I had an experience in the stock market. And when everybody's talking about something, it's a really good time to sell. It's not a good time to buy this thing. And basically, when we start to look at different states, and we were thinking about becoming an operator first. And we said, oh, you know what? But then what if we want to present in North Carolina? Should we expand our operations to North Carolina, open the office there, just hire the people there? There's no way. So how we can do it faster, how we can basically shift that, right? Shift our attention, shift our capital into different states by partner with really good operators to really vet them first, to understand them first, understand their intention, to understand their team, and then deploy the capital with them. And we were always thinking through the capital. We were never thinking through operations because my partner and me, we had the business, we had the great business experience, and we understand what operation looks like. Because operation, it's very energy intensive process. Like it's got to be overseen by somebody. There's got to be a leader, right? And if there's no leader, it's never going to work and stuff like that. And it's got to be structures and got to be people. You got to be huge payroll, right? And this is the companies we're looking for, who's willing to do that. We were in a different stage. We were looking at the capital deployment. We want to be like a really good capital raisers. We want to understand the capital markets and deploy the capital in the best states. Basically, from the operators, we start to look into the different states, for example, like states like Alabama, North Carolina, South Carolina. And then, so we start to really intentionally connect to people who is doing the business in North Carolina. Or maybe look at the operators that we had in the database, but they doing the projects and let's say somewhere else, right? For example, again, in Alabama. What I'm saying is from that point, so we moved into the asset class. We said, okay, what do you want to do? Do you want to test the storage? Do you want, because again, everybody's talking about, oh, we want to do triple net leases. We want to do self-storage RV parks, mobile parks. And then it's all overwhelming, but you want to be sticking to your strategy. And again, we tried the storage rent facilities. We said, okay, so the storage business looks very appealing to us, right? Let's find a good operator who knows exactly what he's doing in the storage business, right? And then we found that, and we found another company who's doing the, how do you call it? RV storage, right? Which is another kind of trading, and then it's a niche thing, but it's not explored as much, right? It's not consolidated as much, but I feel like it's might be the future of the segment of syndication as well. So this is my little experience from the Avista Fund background. So basically what we did, we extracted the best from our experience, personal experience first, right? And then we start to really understand who's doing it legit, I would say. And then first thing is always safe business. And we start to say, okay, here's what we're doing. We're going to deploy our own capital. Do you want to be part of that deal with us? And this is how it all started. So.
Yeah. And I think the important takeaway there for people who aren't familiar with funds is that the service you're providing is that you're able and willing to do that research, that due diligence that most passive investors just don't have the time or expertise to do. And a lot of passive investors want to be relatively hands off. Some are willing to get their hands dirty and dive into Excel spreadsheets and have interviews with these sponsors and stuff like that. But a lot are not. And they're too busy because they're high income earners. They have their jobs. They can't travel to these locations. They can't set aside dinners and do the rigor of the analytics on some of these deals. So you're providing that service for them, which is hugely important. All right, we do need to transition to the turbo round now. So, Igor, I'm going to ask you 3 questions that I ask every guest I have on this show. And I just ask you for a quick, honest answer. Are you ready?
Yes.
All right, let's do it. First one, what is one red flag every investor should look out for?
I was always looking at the team, right? The team is actually the team because, some people connected to the Zoom and you understand they know each other for a couple weeks or a couple months or so. And then they to bet for the future. They say, oh, it's going to work together. It's going to work really well and then everything will be all right. But it's actually not because they're not a team. They just, a group of people who just got together.
Yeah, a bad team can even screw up a good deal. What is a myth about this business that you would like to set straight?
Passive investing. If you into that business, I'm just, again, I want to repeat that, into that it's not passive, it's a business. There's no difference as any other businesses, right? It's a business process. And if you want to be passive, so you got to be investor and you got to be passive investor. So you just need to exchange risk for capital and that's it. And you got to stay passive. But if you go on into that business, for example, some people connecting, I'm a passive investor. I got 10 single family houses. I was like, wow, that's interesting. Tell me more about that. And then, he was like, I manage it myself. I was like, oh, tell me more. And then how much time it takes you, like how many hours per day and then per week. And then now you count, divide your income by the time and you're making like $15 per hour.
Yeah. As someone who has self-managed their properties, I can tell you there is not a whole lot that's passive about it. All right. Third question. What does success look like to you?
It's a freedom of choice.
Awesome. Freedom of choice. And so many people take that in different directions, right? Because it could mean anything. That's a freedom for you to go where you want, do what you want, buy what you want, all that.
Yeah, I'm going to fly tomorrow anywhere I want. So that's the freedom of choice. Do I need to be at work now?
Awesome.
Yes, I do. That's why I'm doing that.
Exactly. No, love it. All right, Igor. Hey, this has been awesome. Please tell our listeners how they can get a hold of you and if there's anything else that you'd like to share with them.
There's nothing to share. So again, it was my pleasure, right, to be on the show, on the podcast. But then they can go to avistafund.com. That's our website. So they can download ebook at the winrealestategame.com. Once again, it's a winrealestategame.com. It's going to download the ebook, How to Win the Game of Real Estate Syndication. And then just my email, igor@avistafund.com. You can always shoot me an email. I'll get back to you in a couple hours. So team, thank you very much.
Yeah, and we'll definitely have all that information in the show notes. I appreciate you coming on, and I look forward to continuing to see you do big things on your journey to multifamily millions.
Thank you very much, Rick. I appreciate you guys, and team, thank you for having us. You guys enjoy the day.
All right, you too.